Welcome everybody to fine-tuning your forecast, your demand forecast for today. By way of introduction, my name is Jill. Basil is on the line here too. You'll hear him popping in to help answer some questions, provide additional detail along the way. Really, the goal for today is that we are trying to make sure that your inventory planner account is configured to match how your business runs. Getting into this, what we're going to look at is first, the foundation here is things that are always true about your products. So these are going to be tied to the forecast methods. So for example, are your items seasonal or not seasonal? Do you continue to sell when you're out of stock? Those sorts of things that are always true for your products. Then we're going to get into a little bit more about your purchasing workflow in order to make sure that your warehouses are configured correctly, so that you're seeing all the information that you need to at the appropriate times. Then we're going to get into some product relationships. So this is bundles and assemblies, also looking at some lead times in between warehouses. So if you're managing multiple warehouses, we'll talk about those relationships too, and catalog, getting the catalog configured in your account. And then we'll get into some temporary considerations for your items. So are you having promotions? Are you doing some financial planning, some open to buy, and have some goals and need to make some edits there? So we'll get into temporary considerations. And then finally, we're going to take a look at how to review your forecasting and replenishment to make sure things are accurate, or if things look funny, where to go and figure out what the problem is. So we're going to walk through that in depth. And I know that this is last, but I want to give a little bit of a preview for where to find this information, because I'm going to be referencing it through a lot of these other sections before we get to it in depth. So if we're looking at your account here on the replenishment page, you'll see this eye icon. If you don't see it, click on the gear icon and you'll type in details. That's where you'll find that column to enable. So go ahead and do that. And then when you see the eye icon, click on that and you'll see a lot of information. So this is what I'm going to be referencing. We'll come back to this at the end and go through it in depth. But this covers your forecasting method as well as forecasted stock levels and what additional purchasing is needed. So this is a wealth of information. Definitely check this out, become comfortable with using this and reading this, and we'll dive into more of this. So that's a little sneak preview of what's to come later. Okay, so let's get going into the forecasting method. So as I said, these are things that are always true about your items. Seasonal, non-seasonal, are they trendy? Those sort of things. This is something that you can set account-wide, and you can make exceptions by variant. So it would be really common, for example, to have both seasonal and non-seasonal items in the same store. So those need different forecasting methods. A forecasting method will apply across all warehouses. So it's not possible to say something is seasonal when we sell it at Amazon and non-seasonal when we sell it through Shopify. That doesn't really make sense. We're looking at how does this item perform all the time, okay? So if you want to take a look at these in your account, come to account down here at the bottom of your menu, then come up to settings. And then finally click over to forecast. And we're going to go through these forecasting methods here. So the first one up is recent sales and trends. This is a non-seasonal forecasting method. And what this will look at is a longer period of time to figure out what the customer demand is, but also can pick up on, okay, is there a change that's going on right now? An increase in demand that we're seeing over the last couple of months, as an example. So some example products that might apply here are, for example, like dog collars and leashes, or cake pans, mixers, different things like that that sell all year long. There's nothing calendar-based about spikes in demand. So that would be best used for recent sales and trends. So there's two components to this forecasting method. One is how quickly do items sell? What's the rate of sales that we're looking at? And then the second item is, what is the direction? What is the trend that can be applied on top of that? And there won't always be a trend, but if there is one, we want to pick up on that. So when we're looking at those forecasting details, we can see that this is how that will be represented. So you can see the top line here shows adjusted average sales. This could say sales velocity. This is that foundational piece. How quickly is this moving? And then we're applying a trend on top of that, an additional consideration, because if there's an increase in demand, we want to get ahead of that. We want to anticipate that you're going to need more stock. And so incorporate that into the replenishment recommendation. So those two components, the foundational rate of sales and then the trend applied on top of that, we can see that here as we're setting up the forecasting method. So the date range we see here, February 2018 through February 2021, that means we're looking at customer orders during that time. We're looking at what is the rate of sales during that time to build that foundation for the velocity or the average sales there. Then for the trend consideration, we're looking at the field to fill in at the end there. How many consecutive months does a trend need to be in place before we apply it? So you can adjust this. By default, it's 2 months, but maybe that would be too reactive for your store. You want to see a longer trend to make sure it's not a blip. So you could extend this to maybe 3 or even 4 months. Generally, I probably would not recommend going above that just because that's such a long period of time. If the trend is up and then down, that basically starts the trend clock over again. So it has to be consistent during this time in order to have that trend applied in your store. Okay. Another important thing to know about how the sales velocity is calculated is that it starts with the first sold at date for each variant. That means that our date range here starts with February 2018. But say that we introduced an item in February 2020. Well, we wouldn't want to count the 2 years when that item did not exist towards the sales velocity, because that would really bring things down. That doesn't make sense, right? So we start with the first sold at date and calculate on from there as it applies within this date range. Okay, so this will be appropriate for most stores to use this first sold at date. If you allow pre-orders or you're doing a big launch even before you have stock, this could be something you look at. There could be special circumstances where you want to look at using the created at date. So this means the date the listing was created. And if you're in your replenishment report, again, click on the gear icon. You can add both first sold at and created at to your report so that you can see each of these days. So you can see how there's a difference even here of, okay, we created the listing, we placed the order, it took a while to get stock. Then once we have stock, we go live and we can take some sales. Okay, so just keep an eye on this. Be aware that we're using the first sold at date. If you have some special circumstances where you do want to use created at instead, use the chat icon down here in the lower right-hand corner. We can customize your account for you and make sure that you're using the created at date. Or if you have questions about that, if it applies to your store, let us know. We're glad to talk through that with you. Okay, so Basil, any questions so far before we go into the last sales method?
So far, you've answered everything perfectly. I sent an article there about forecast methods. We did just get one from John. How does the forecast account for stockouts? If we were out of stock for 3 of the last 12 months, how does it impact the forecast?
Perfecto. All right, John, I'm going to have you sit on that question for just a little bit because we're going to dive into that just as soon as we get through the forecast methods themselves. But that's a great question to ask because it really affects your forecasting. So you'll see how that's incorporated into the calculations. All right, so getting into the next forecasting method, last sales. So this is for trendy items where the sales velocity changes significantly and it changes often. Okay, so it's really volatile, it's really up and down. You would use this sales method or this forecasting method if you want to be super responsive to what the customers are wanting. So an example of this could be maybe in fashion. Think about a celebrity wears a necklace or a dress or something like this. We don't want to look at the demand over the last year. That's old news. We want to look at what the demand is in the last 7 days or 14 days, maybe 30 days, a very short amount of time to be responsive to what that demand is. Okay, so this is a very narrow window where we see a lot of volatility in this item. So when we're setting up the forecasting method for last sales, you can define how many days you want that reference to be. Grain of salt here that the fewer days that you are using, the more volatile your recommendations are going to be. So, say we were looking at 7 days or even 3 days, the overnight sync is bringing in a new day of sales. And if we're only using 3 days of sales, you can see how that would really affect our replenishment recommendations. Whereas in the last forecasting method, if we're looking at several years, each day is going to have a very minimal effect on what that replenishment recommendation is. Okay, so just be sort of emotionally prepared that this will be very volatile. That could be what you want, but just know that that's that's what you're getting with this sales or with this forecasting method. So we're going to talk a little bit about stockouts with this before we get into a whole section about this, but it's really interesting with the last sales method here. You can see the last part of this explanation on the screen shows if you're using the stockouts history, we go back and look at the last days. So in this case, the last 14 days when this item had stock. Okay, so I'm going to show you an example, and this is a pretty extreme example, but I want you to see what this looks like. So in this case, we have last sales set to 30 days. So we're going to go back and find the last 30 days when this item had stock. And in that case, we sold 3 units. So we're having a sales velocity of 3 units per month. Then that means the forecasting says the ideal amount of stock on hand or that you could sell is 3 units per month. And we're going all the way back. We're ignoring those stockouts and going all the way back to when this item was in stock. Okay, so that's how that works with last sales. It's kind of an interesting thing to keep in mind. So do be aware of that one. Okay. Let's get into seasonal forecasting method. So probably with when we say seasonal, you're immediately thinking of holidays, something that could be specific to an event, so this could be like a St. Patrick's Day hat or some sort of decoration. This could also be something like a summer clothing collection. It's important to keep in mind that seasonal does not mean that an item is only for sale during part of the year. It can mean that, but it could apply to things that are for sale all year long. So as an example, grilling accessories. So the giant tongs and all the fun stuff that you use when you're grilling could be for sale all year long, but we see peaks in demand over the summer because that's when more people are buying it. So we want to be stocked up. We want to be ready for what's happening over the summer. So that we can meet the forecasted demand and not miss out on revenue. Okay, so seasonal can mean limited time. It can also be items for sale all year long. So you don't need to define your holidays or what the seasons are in Inventory Planner. We are looking at what happened the same month the prior year. So there's like 2 parts of this. One, we're picking up on the pattern of when those spikes in demand are. Then we're also looking at year over year. Is there growth? Is there a trend? So let's take a look at what this looks like. First, we're looking at the last 12 months. We're looking at this pattern. So this is the solid line here shows, okay, here's the pattern of what's happened over the last 12 months. Then we apply that to the forecast. So you can see that's roughly the same pattern that we saw the prior 12 months. We're seeing the same little peaks in demand there. But that's not the whole story because we don't just want to replicate exactly the same amount that we sold last year. We need to see, is this item trending overall as an increase in demand or a decrease? So there's also the year over year trend. And the way that this works is that we are looking at the last 12 months and comparing it to the prior 12 months. So comparing these 12-month periods, that's how we get our year over year trend. And that can be applied in the instance of this forecasting method. Okay. Let's talk a little bit about this trend because I think that there can be some confusion over this. So let's talk through some examples on how this is applied. So you'll see when you're setting up this forecasting method, there's a field there where you can say what will be the limiter. So basically the ceiling and the floor. So the ceiling if we have growth, the floor if we have kind of a decline in demand, we can set what those bounds are on this method. And maybe you're saying, why would I want to limit it? Why wouldn't I want the true trend applied here? So I think it's helpful to think about an example of like your own company. So maybe in the very early stages, you saw incredible growth. It could have been 200%, 300% year over year growth. But as a company matures, you're not going to see 300% growth every year, right? It's going to limit, it's going to taper off, it's going to kind of plateau. So when we're looking at these long periods of time that the seasonal forecasting method is, if we're applying 150% growth, that could be overstating what's going to happen in the future. We might be seeing things plateau, even though it's still growing, but there's just sort of a natural ceiling that happens to these. So this could be a reason that you do want a limit. That said, I think that that was definitely true pre-COVID, where 30% was a good limiter for a lot of merchants. I would say during the last year, I'm talking to a lot of merchants who genuinely are seeing a lot more growth, and 30% is really too low for them. And so this may be a setting that you want to play around with a little bit, and you can even see this in the forecast details. So if we take a look at this, here's what it'll look like in the details. So for this item, we truly had a 42% increase in the demand, but because of our limiter, we're only going to apply a 30% increase in this demand for the forecast. And this is calculated per variant. So we can look at another item in the same store that had a 21% increase. That 21% increase is what's applied. Okay, so we're not applying a blanket 30%. It's just saying that's our ceiling or that's our floor, and we're operating in between that. So, you know, if you're seeing something like 150% here, but we're applying a 30% ceiling, maybe you want to do some adjustments and make sure that that's not artificially, you know, keeping your forecasting too low and buffering it too much. So be aware of that setting. Okay, so those are the three primary forecasting methods. If you are still not sure, is my item seasonal or non-seasonal, you know, what does it look like? A great place to go can be here under reports on the left menu, then come to year on year. Okay, so by default, we're looking at the total view. You can see the number of units sold for the same month the prior year. Because we're kind of new in 2021, maybe you want to scroll back and look at 2019 compared to 2020, and you can see the number of units sold. So what we're looking for here is, are there peaks at certain times of the year that happen every year? We always see peaks in May and September as an example. That can be a clue that we actually are looking at seasonal items. And you can break this down and look at, you know, maybe categories, or you could go down to the variant level and look at what those patterns are. But this is a great reference to take a look at, do we have seasonal items or not? If you're not quite sure, check out the data here. All right, let's pause there for some questions, and then we'll get into stockouts as promised. But what kind of questions do we have coming in here?
Yeah, so two questions still about the stockouts. I did answer them in here, but you know, we can you'll hit on them and we can give some more detail once you touch on them. But I did want to touch on Garrett's question, just asking if there's a recommended period using the recent sales and trends method. And my answer was, it really just depends. Which, you know, if I was saying, you know, essentially, especially customers who have experienced like a major growth in the past year that's different than what's happened in prior years, and you want that new pattern reflected, you're going to choose a sooner period. Remember that whatever you choose for your default forecast method and settings, you can always customize by SKU. So maybe for the most part, you're using last 2 years, but for a specific segment of items, they really, you know, some hand sanitizer or something, you want to focus on the last 6 or 9 months because that stuff really took off. You can always fine tune and make those adjustments by SKU, but in general, yeah, I mean, we're gonna have to, you really got to think about that, what trend is going to continue, if we should do a lifelong kind of trend, or if we need to zone in on a more recent period. But I'll definitely say recent sales and trends I would recommend for when you're looking 3 or more months. If you're looking for a shorter time period, I think last sales is the more reactive approach, especially like last 15 days, last 30 days. That's a good one to really zone in on the most recent period.
Yeah, definitely agree that kind of March, April of last year can really be an inflection point for a lot of merchants. So perhaps take a look at limiting your time period to that. If COVID didn't have a huge effect on your store, then you can look at a longer period of time. Just always thinking about, what's most relevant in the past for what we expect in the future. Okay.
We have a few rapid fire questions as well. So outside of SKU projections, what about collections forecasting? We'd like forecasting by large cooler SKUs and have each SKU identified in that collection forecast. So forecasting takes place at the variant SKU level. You can aggregate that data in a variety of ways in replenishment and throughout reports. If you want to be able to view items specific to a certain collection, you can always filter to find those specific items and manage them a certain way. So you can always take a segment of products and engage. And you can also use reports and break down, by collection to get a sense of how behaviors are working together. But yeah, essentially that's the collection forecast is really just isolating those SKUs using filters and managing them independently. And then, so Bill then asked about generating last year's sales for the same period. So yeah, I mean, for that, I would more or less recommend recent sales and trends method. You could use the last year, but just use the high trend reactiveness measure. That's unachievable. So if you were to do the last year and then you say you set the trend reactiveness as 12 months, that's saying we would have to see the same pattern for 12 consecutive months to consider it like a real trend. So really, in this case, it's just going to be more or less a flat average of the forecast over the past year. If you want a last year's same period, same forecast, you could use a seasonal method and then zero your year-over-year growth trend. That's more or less going to have that behavior. It looks like we got a couple more that just came in. How do we account for other seasons besides Christmas and Black Friday? So Jill, if you scroll down a little bit, we've added a feature recently. You can add some extra holidays in here too. Whatever holidays that are added, we're going to exclude from the forecast first so we know how regular months perform. We'll add in the holidays, specifically November, December, if you have the first option enabled there. And if you have like a special holiday you have to account for, you can dial in and make some adjustments for that specific period. And then one more here. So seasonal forecasting, we have a strong correlation with ad spend and demand. If we increase our ad spend by 2 to 3 times during a seasonal period, I assume we should tweak our seasonal forecast setting the same.
Yeah, so if you're doing something different than you did last year, then I would recommend editing your forecast, and we'll get into a bit of that. So think about, is this a promotion that we ran last year? Are we doing, dog days of summer every year, that sort of thing? Then you can use the forecast as it is, but is there something that the data is not telling us, the historical data is not telling us, that you with your business intelligence will know? And that's a perfect time to come in and edit the forecast and say something else is going to be happening here, and we need to kind of pump up our forecast. So we'll get into editing the forecast and some considerations there. All right, so it seems that there's high demand for stockout information. So let's get into that. So the question with stockouts is, do you continue selling when an item is out of stock? If you stop selling when you're out of stock, then leave the default settings alone. This setting is enabled, use stockouts history. This means that we're going back to look at when you're in stock and how much you're selling, right? That's really the goal of what we're trying to figure out, is how much do customers purchase when an item is available? We're trying to get to that sweet spot. So we're disregarding times that you were out of stock because you couldn't sell anything then. okay? If, on the other hand, you do continue selling when you're out of stock, you will want to disable this setting. And again, this can be applied. This is obviously account-wide that we're looking at. There can be an exception by variant, and we'll get into how to apply that. But just generally in your store, how does this work? Do you stop selling when you're out of stock? That is the case for most merchants that we work with, not all, but really critical. So let's walk through what this looks like. Let's go through an example of how this really changes the consideration. So say we have this example where we looked at the last 30 days and we sold 30 units. This looks like a sales velocity of 1 unit per day. However, if we go back and consider when we were in stock and out of stock, we were actually out of stock half of the time. So customers could only purchase 30 units during 15 days. That's the only time it was available. So our sales velocity is actually 2 units per day. So you can see that we just doubled the sales velocity by considering the Stockouts history in this case. Okay, so this makes a really big difference with your forecasting and how this is computed. Okay, so there's information on Stockouts. A couple other things that I'll touch on briefly in forecast settings here. One is use gross sales. So by default, we're using net sales, meaning that returns are factored in, and that's what we're using to forecast. If you want to use gross sales, for example, if you have a high rate of returns, so this could be, a lot of fashion companies do have high rate of returns. You may want to forecast based on gross sales so that you're taking that into consideration. You have enough stock on hand. This doesn't apply to most merchants, but when I see it come up, I think it's usually fashion companies. The next two settings, let me try to talk you out of using these. So default replenishment, note that this applies to variants with 0 stock and no sales. So basically brand new items that you don't have in stock yet, and there are no sales. So you can put a default replenishment in here. It's a static number. So if you always want to have a replenishment recommendation of 10 units when you add a new item for your store, you could put that in here. Note that as soon as you have any stock or any sales, this default replenishment no longer applies. Okay, so those are the only circumstances that this field applies to. Safety stock. Please don't use this. If you need to build in a buffer, I think, maybe you're coming from using spreadsheets to forecast customer demand, and it was helpful to put in a safety stock of 5 units or 10 units, something like that. There's a better way. So when we're setting up specifically days of stock, so days of stock is our ideal stock cover. When we get a new order in, how long do we want it to last? This is the best place to build in your buffer because it will be dynamic and it will be tied to each individual variant and how much demand there is for that. So if we had set the safety stock to an item for 5 units, but then the demand really took off and we're selling hundreds of units more than we used to, 5 units is not relevant anymore. That means you're going to have to come back and maintain that number. And it's going to be more work for you in the long run. Also, across your whole store, is 5 units really going to be a relevant number for everything? Probably not. Instead, if you're using days of stock, this will be tied to the sales velocity for that item. So your hot sellers are going to have more units. If we add days of stock that's maybe at 40 days or 45 days, that will build in more buffers so that we're getting more stock on hand and we can handle problems with the supply chain. So please add to your days of stock instead of using the safety stock here, okay? This concludes my public service announcement. We do have a blog on this. I'm glad to send you the link on this where it goes through this even more in depth to make the case for using days of stock rather than safety stock. Okay, so how to apply these forecasting methods. So here we're obviously looking at account-wide settings. This will be how most of your items in your account operate. But say you have exceptions to the rule. You have seasonal items and we're using a non-seasonal method by default. So that's when you're going to come into the catalog and we're going to look at forecast settings. So here we can see, here's our default method. We're looking at the sales period here. These items are all replenishable. Okay, so we have a quick glance at what's happening here. But say that we have a particular category. Let's look at bags. That these are all actually seasonal items. So we can do a couple of things here. One, I could do this on an individual level and say, I'm going to enable custom settings. So see how this went from not editable to editable. So when we have custom settings, I can say this is seasonal. We're going to use our Stockouts history, and then we have our limiter growth that we talked about here with the buffers, okay? Or I can look at all of these at once. We can do this in bulk. So I'll select all of these items, check out bulk actions, and then we'll come to set forecast settings. Here again, we're going to enable what our custom forecast settings are, and we can change the method, or we can say these we do continue to sell even when we're out of stock, and so we'll disable the Stockouts history, apply that, and now these are using custom settings. Okay, we can see the forecast method here and our limiter. Okay, so that's how you apply exceptions to the rule. If there's variants that operate differently, here's how you do that in the catalog. All right, so any questions that we need to pause for here before we get into warehouse configuration?
I realize I didn't have my mute on, so you probably heard me typing away. We're getting some great engagement here. Thanks everybody for the good questions. Yeah, I mean, I think some I've been answering the questions in here, but I think a few things will be helpful just to make sure we touch on. So regarding stockouts, I think there was an important question here from Bill just about what happens if there's sales that take place when you don't have the stock, maybe because the inventory number is wrong. Just curious if those sales are counted. So I just wanted to specify because there are a lot of questions about the stockouts history setting. So general recommendations, if you do not have that stock, if you have zero stock and you cannot sell it, it's best to disable the use stockouts history setting. We're tracking your stock information starting with the day you connect to Inventory Planner. We don't know what it looked like prior to that point, but we're tracking and we see every day what the stock is looking like and when you're going out of stock. And you can bring that information in retroactively as needed. However, if you are accepting sales when you don't have that stock and you have this setting configured, it's gonna create some strange behaviors because we are tracking those stock out days. We're subtracting them from the denominator. So say you sold 30 last month, but you were out of stock for half the month. We're gonna look at it like you sold 60. So we're subtracting out those stock out days, but we are including all the sales that are taking place during that period. It's a little different depending on the setting, and I strongly encourage checking that forecast methods article I sent in the chat. You can see it towards the top of the chat. It's going to work a little bit differently depending on the method, but recent sales and seasonality in particular, all we're doing is just taking the sales during a period over the days that had available stock during that period. Last sales would be a little bit different though. We're going to focus specifically on the days with available stock and the sales during those days to come up with the sales velocity. So if it's just a matter of the inventory number was wrong, it should be okay. I think that part's okay. But if there's true overselling happening, then I would be very careful. The more sales we see when there's zero stock, the forecasts start to get crazy. And the other really important implication is that if you have that enabled, essentially we assume that you don't accept back orders. So if you have a 100-day lead time and you're waiting to get more product, that's lost sales as far as we're concerned. So if that's not the reality, you should definitely turn that off to make sure we consider all that back order demand that would take place during the lead time. Again, the article that I shared is going to be super duper duper helpful just to explain all the impacts of stockouts history. Sarah had an interesting question just about, we had a couple of people that asked about like if there's some major growth expected, whether it's related to advertising or maybe just things really like blew through the roof over the past year. So of course, yes, we have the limiter there. So we're going to look at your last 12 months versus the prior 12 months to gauge growth. So for seasonal, we're looking at July's to help forecast July. And if there's some massive growth, we're going to say, oh, okay, you grew at 200%, but your limiter is 30%. So say you stretch that, you make it 300% or something. So, what she was curious, if you remove it, she needs to understand more clearly how this impacts everything. So yeah, I mean, we're always looking at the last 12 months versus the prior 12 months. And you can fine tune it from there. What I'll definitely suggest, after you configure your default forecasts and everything, you'll have an opportunity in the edit forecast section to make adjustments, especially like if you're going to be doing some advertising, maybe a specific category of products is going to be up 30% in a period because you're doing some promotions. We wouldn't catch it from the past sales. That's where the edit forecast section can be super useful to say, okay, sure, we're looking at the last year. That's fine for a baseline forecast, but then let's lift up March. Maybe we're actually going to sell 5,000 units because we're doing an ad. So this will be the second layer to really fine tune your forecast and make some adjustments that we may not necessarily pick up from your past sales. But I would also definitely recommend this if you're stretching that limiter and you just want to get a sense, how's that impacting things? This is a really good place to look. Whether you're looking item by item, or you look at the total level, or you look by brand or category, this is going to give you a sense of how aggressive that's going to make the forecasting. And then she also mentioned here, if you have like a specific order that's going to throw things off, I would definitely recommend utilizing our wholesale planning functionality. That just allows you to separate out your past sales from wholesale customers versus regular customers, so we treat them separately. There's a lot of really useful information. If you just open the chat box in the bottom right and search wholesale on exactly how that function works, but that is the prime intention of it. It helps to kind of remove that anomaly, just treat it separately, and then we would plan orders related to that customer separately in the future if they're relevant, and it would just make sure that we base the forecast off of the true regular retail demand in that case. Those are the two most important questions that I saw here that I wanted to make sure to touch on. Why don't you go ahead and dig in, and we'll hit on some of the others on the next break.
All right, perfect. So now we're going to get into what is your purchasing workflow, because we want to make sure that you have warehouses configured correctly and you're seeing the information that you need to. So to see this, go to Account and Settings, and we're going to be here on the Connections and Warehouses page. So the first thing to do here is to figure out which locations you need individual forecast recommendations for. So as an example, here in our Amazon connection, maybe I'm only selling in the US, I'm not selling in Canada and Mexico, and I'm not doing fulfilled by merchant. So I'm going to disable those warehouses so that I'm not seeing those in my dropdown of warehouses. This does a couple of things. One, it cleans up your view so you're only seeing what you need to. Two, it's going to lower your bill. So definitely disable warehouses that you don't need. Okay, that's the first thing to cover. Then the second one to think about is, do you have a prep warehouse? Or do you have a location where you are storing stock, but you are not fulfilling customer orders directly? So we should be seeing with your connection any locations where you are fulfilling customer orders directly from these locations. But as an example, very common for Amazon sellers to have a prep warehouse or a cross-docking location, a bundling location, something like that, that has some of their stock that's not accounted for if we're just taking stock information from what we get directly from Amazon. Okay, so in order to set up your prep warehouse, you'll come down here to the bottom of the screen, see new IP warehouse. So inventory planner warehouse. This is a location that only lives in inventory planner. So we can come in here and we're going to call this our prep warehouse. By default, we will show all listings from all connections in that warehouse, but say it's our Amazon prep warehouse. I can come in here and say, only reflect the listings that we're getting from FBA US in this warehouse. So you can dial that in, okay? All right, so that's how you create a prep warehouse. We'll see it down at the bottom here. Really importantly, when we're here in the replenishment screen, let me refresh this really quick. So we'll see the prep warehouse now, and it's probably still loading for just a moment here, but you'll notice the stock is an editable field, whereas it is not with any other connection because we're pulling the stock information. So it's very important that you set what your stock is today here. This is a one-time thing that you'll need to do. Then in the future, stock is maintained. You add to the stock level by receiving on a purchase order. So say we place our purchase order, it comes to our prep warehouse first, we receive that in inventory planner. Then we decrease stock when we make a transfer to Amazon. And we're going to walk through this whole workflow, but very important to pay attention to the stock level in your IP warehouse, especially setting that up at the beginning of things so that you have the right level taken into consideration. Okay, so that's a prep warehouse. Next, do you need to see demand for several warehouses at once? If so, create a combined warehouse, which we'll see at the bottom here. And I want to walk through some examples of a combined warehouse that are common scenarios that we see for when you would need this. So one of these is you're selling on Shopify and you're selling Amazon through FBA. Your combined warehouse will bring together all the sales, all the stock, any purchase orders or transfers coming into either of those locations. So basically you want to think about, I've already paid for this inventory, or I'm already committed to this inventory. I want to take everything into consideration when I'm placing additional purchase orders, right? I want to know what I've already paid for and what additional stock is needed. Then our workflow is that when we use the combined warehouse to create a purchase order, it will be shipped to the destination warehouse is our Shopify warehouse. We might also call this our distribution center, like our main hub for where all of our stock goes first. Then we will create a transfer to our second warehouse, which is Amazon. It's the FBA sale, so Amazon's own warehouse in this case. Okay. Another scenario that is very common, again, for Amazon sellers who have a prep warehouse, your combined warehouse will be both the Amazon FBA channel and will be the prep warehouse, so that we're taking all of that stock into consideration to see what additional stock do you need. That will ship to the prep warehouse. Then we will make a transfer to the secondary warehouse, which is Amazon. One last example that's slightly different. Say we're selling on Amazon, or we're selling on Shopify. We have our main location, our distribution center. We also have a retail location that we're covering with Shopify POS, and we're selling on eBay. So think about, we have 3 warehouses here, but this Shopify main location is also the stock information for what we're selling on eBay. Like, we don't ship to an eBay warehouse somewhere. We're fulfilling from our own warehouse. So when we're configuring that, we don't want to double count our stock, but we will create a transfer to our retail location because that's a physical location that's separate from our main warehouse that's fulfilling our Shopify online orders and what we sell through eBay. So again, these are common scenarios that we see when you might need a combined warehouse. So let's take a look at how to set that up. So at the bottom of the screen here, new combined warehouse. And so then we will put in those contributing warehouses. So we'll look at Shopify. We want to add in FBA. Then we look at what information needs to be combined. If you are looking at physically separate stock counts, so Shopify is physically separate from an Amazon warehouse, we will select combined sales, stock, and purchase orders, and that brings everything together. Say that this warehouse was our eBay one, where we're already accounting for the stock that we have with the Shopify information. In that case, we would want to select this option, combine sales, but ignore stock, so that we're not double counting what that stock information is. If you have questions about this, there's more detail over here on the right, so definitely give that a read. As always, chat us, create a ticket if you have questions about this, because this is really crucial to see the right information for your store. So one other setting here is the default destination warehouse. So here, where we were saying, when we're looking at the combined warehouse, where does the stock go first? You can set that default. Here, it will be shipped to Shopify first. So we'll set that up. Again, scroll to the bottom. Here's our new combined warehouse and the warehouses that are contributing to that. So that's how to set up a combined warehouse. The next most common question that we get about combined warehouses is, how do I set up the lead time? So let's walk through an example here of how to think about the lead time for your combined warehouse. So if we're looking at this scenario where we have Shopify and Amazon, you need to think about the whole journey, because we want you to be alerted when it's time to ship your stock. So to place an order to cover everything that's included in the combined warehouse. And that includes the last stop on the train here of getting it to Amazon. So you need to think about, it starts when you place the purchase order with your supplier, you're receiving stock at your distribution warehouse, and you're transferring to Amazon. The lead time is that whole time for your combined warehouse. Okay. Then for your destination warehouse itself, this will be the time it takes to place an order and receive it at the distribution center. And finally, the lead time for Amazon will be only the time it takes to transfer from the distribution warehouse to Amazon, or your prep warehouse to Amazon. Again, the alert for this warehouse will say it's time to transfer. You need to be alerted when it's time to take action for just this location. And so the lead time will say, here's how long it takes to transfer. Okay, so that's lead time in a combined warehouse. We can set up lead time in a couple of different ways. Here in the catalog, you can do this under vendors. If you come into settings, you'll see each of your locations here. You can review it as well in catalog under warehouses. So you can set up and look at your lead time there. We've got several articles on this and we're running short on time. So if you have more questions about setting up your lead time and days of stock, please let us know. Okay. All right.
Joe, can I mention something here quick?
Yes.
So, okay, we do have the combined warehouses. I think it's important to mention because we were actively working on a solution for this and it was asked on here. The combined warehouse works well in the case that you have a two-way flow of stock. So if you can easily move stock from one location to another, it's great because you're adding the sales and stock together to get like a big picture of what you have to work with. Forecast, the replenishment, lead time, et cetera, is all unique to warehouse. Whatever you do in FBA or it would not impact the combined warehouse because the intention, the design is that we're combining sales and stock to give you an independent forecast and replenishment analysis from a combined perspective. FBA merchants in particular, there's not a true two-way flow of stock. You can't pull stock out of Amazon and use it for another reason. So we are actively working on a solution that is like it's a specific type of warehouse where we actually do add together the forecast and replenishment of the child warehouses. So it serves that purpose. It's something we've heard a lot from customers over the years. We haven't published information about this. There is a beta like testing environment, so you can test it out. It's going to continue to it's going to develop. There's going to be changes. So if you want to be able to test that out and just see does it work for you, by all means, feel free to send us a note. But I just wanted to mention that because there is that important caveat. If there's not a two-way flow of stock, you should be careful with how the combined warehouse is currently configured. But keep in mind in the coming days/weeks here, there's going to be a nicer solution. So yeah, feel free to be in touch with that if you'd like to kind of learn about the beta piece and some information on getting that set up. But I just wanted to make sure I threw that out there.
Awesome. All right. Breaking news here. This is why you tune into the webinars, right? You see a little preview of what's coming next. So thank you for mentioning that. I think it's going to be a huge improvement that will really work well for a lot of people. Okay, so while we're in the catalog, we're talking about product relationships. It's important to configure if you're selling bundles or if you're selling assemblies. Let's talk briefly about the definitions of these. And again, we're having a whole session on bundles and assemblies later this month. Definitely sign up for that. Basil will go in depth on all of this. Bundles are virtual groupings of items. So if we look at this top item, we have a 5-pack of t-shirts and an individual t-shirt. We're selling both 5-packs and individual ones. There's no pre-assembly, pre-bundling, pre-packaging of the 5-pack. If you think about in your warehouse, if somebody orders the 5-pack or the singles, I'm going to the same bin in the warehouse and I'm just pulling 5 instead of pulling 1. Okay, I'm not setting stock aside. It's not counted separately. That's a bundle. It's just a virtual grouping and it just physically comes together at the point of customer fulfillment. As opposed to assemblies, where there is pre-assembly manufacturing time that is needed. So it's not enough just to have the components, but we need time also in planning to think about how long does it take to put these together. Okay, so that's the difference between bundles and assemblies. Be sure to set that up. You will see recommendations for the components of each of those. So every time an office table is purchased, we will show that as demand for both the legs and the tops, and you'll see replenishment recommendations for those. Same with bundles. You will see recommendations on how many of the individual t-shirts to purchase. You will not see recommendations of how many 5-packs to purchase because it's not a unit on its own that you're purchasing. It's incorporated here into the individual units as well. Okay. All right. Skipping ahead to editing the forecast. So we touched on this just a little bit, this edit forecast page. If there is something to plan for that the data, the historical data would not indicate, so that it's not known to the forecasting calculation. So you're having a promotion or you're doing some financial planning, you have some goals that you want to apply from the open to buy section. You can do that here on the edit forecast page. So we can do this either by units, or we can come in here and do this by revenue. Or we can do here on a variant level, we could do a percentage increase and say, we're expecting a 25% increase for these months. So you can be wearing your marketing hat or coordinate with your marketing team and say, here's when we're going to have promotions on certain items, and incorporate that in so that you are seeing sufficient replenishment recommendations for those times. Okay. Here, I will also touch on new products, because when we don't have any sales for new items, we need some information so that we can make a replenishment recommendation. So we can handle that here with the icon if we come to forecast settings. Basically, if you think about an existing item that has sales that will operate similarly to this item, you can do that here. In the details, you can also do this in the catalog. If you come into forecast settings, by default, you won't see those needed fields. So click on the gear icon, and anything that says combine, go ahead and enable those. So I'll show you how this works, what it looks like. So now we have some new columns here. So let's say I'm taking a look at this office table, okay? And it's a new item. It's going to operate similarly to the large one that we have been selling. So I'm going to click on the icon, and I'll come in here. I could search at the top, but I see this item here. It's going to be similar to the large tabletop. So I'll apply that. Now I can see here's the item. We're going to be borrowing essentially the sales history for this item. And maybe we think it'll operate or have similar demand. So we could leave this at 100%, or maybe it'll take a little while for this to really take off. So we want to forecast this at 75% of the demand of the original item. And then you can set a stop date. So this means after, say, 6 months, something like this, we want these to stop combining. And so I can set a date in here to say, after July 31st, we'll just be using the sales history of this tabletop on its own to forecast. And that's what'll be happening there. Okay, so that's how you can bring in a new item and an old item, compare the two so that you have some forecasting for the new item. All right. Okay, we're just about out of time, so I want to be sure to spend a little bit of time here on details and how you can understand how the forecast and replenishment is calculated itself. So maybe this number looks strange, or you just want to know more. So we'll click in here. So at the top, this white section, we're seeing the forecast method. This is determining what the demand will be overall. So we can see these forecast settings that we went through. This is also available here on forecast settings. We can look at, okay, during this time period, here's how many units we sold. We actually are going to exclude those holiday sales that we talked about in the settings. And with those excluded, now we've sold 4,896 units over 405 days to determine our sales velocity. If there's an additional trend, we'll see that here. And so all of that detail is showing you here's what the forecasted demand is. The next step is to take a look at where are we at today? Do we have enough stock to make it through our planning period? So today we have 18 units on hand. We've got 76 units on open purchase orders right now, and this is pulling from purchase orders within Inventory Planner. Given all of that, we're going to run out in a day. We're going to run out tomorrow. So you can see the date here. If we had sufficient stock, we could have sold 166 units over our planning period, over our lead time of 14 days. So we will definitely be out of stock at the end of this, at the end of our lead time. Then we're looking at, okay, once we can get more stock, how much can we sell? So days of stock period forecast. So for this 30 days, we can sell 366 units. So our closing stock, in order to end our planning period with enough stock, we need to order 367 units, and we need to do it today because we're going to run out during our lead time. And we can see all of this on this graph over to the right. So here's our stock today. We've got those 18 units we're going to sell out tomorrow. If we fast forward here during our lead time, you'll see this green bar here. That represents when we can get another purchase order in. So at the end of our lead time. And then with that, we would add to our stock. And you can see how that would decrease over our days of stock period. Okay, so this tells you what's going on. If something looks weird and you think replenishment is too low, maybe you meant to buy seasonally and this is only set for 30 days. That's why it's too low. So this will give you the total breakdown on what's happening and where you need to go in order to adjust your forecasting settings and methods in order to reflect what's happening in your store. All right, I know we're a little bit over time. Thank you for sticking with us. If we have additional questions, glad to stick around for a little while longer and answer those. But thank you everybody for joining us. We'll be sending the recording of this a little bit later today or tomorrow. So be on the lookout for that. And we hope to see you at a future webinar. Again, if you have questions, we can definitely stick around and answer those. And we appreciate you joining us today. All right, what questions do we have still outstanding as we went through a lot of information there at the end?
Yeah, and I answered a whole slew of them. Rachel, I did just answer your ticket. I wanted to make sure that was very clear on catalog. Could you just pop it open for 2 seconds, Jill?
Mm-hmm.
Vendors is a section for vendor related information.
Mm-hmm.
The rest of the sections here are related to items. So variants/bundles. Variants/bundles is not a section in itself. Those are 6 sections that are part of variants bundles because those are all different properties and attributes related to items, variants/bundles or assemblies. So that's why it's grayed out. It's not a variants bundles in itself is not a section. It's just it's a classification for everything under it. We have a few people just giving us some mad props. So I'm going to answer them live and say thank you. We have a few people who have reached out that are excited about the combined forecast concept, the combined replenishment warehouse. So we'll send some info to the users that reach us. If you look in that chat box, there's an address there I put in there, contact@inventory-planner. .intercom/ so if you message that email, if you have other questions, that opens up a ticket. It's usually a quick way to get some answers from us, and we can give you some info about this beta combined forecast warehouse concept. So feel free to ping us there. We did get a couple other questions for new products. If nothing is comparable to combine, what is the best forecast method to use for these? Ooh, that one's tough. If it's brand spanking new, you don't have any history and there's no comparable method, honestly, I just say it's best to set the forecast manually for the first 60 days at least. And then by that point, we should have something good to work with. If it's seasonal, let it go for 60 days. Like you do a manual forecast for the first 2 months. At that point, we should have enough of a reference of how it's selling within the respective category or warehouse to give it a good seasonal forecast. If it's not really seasonal, you could even switch sooner. Use last sales method once it has 5 days of history or something, and then that'll be okay. But without any past sales at all to work with, we cannot produce a reliable forecast. At the end of the day, we need to get a sense of how it's performing and have some sales there to work with. So that should answer that there for Vanessa. Sarah, we're looking to group products. Actually, sorry, there's another Sarah that asked sooner. Do you think that having the sales by channels from one warehouse will ever be an option? It would be really helpful to see which of our channels are having trends. So Sarah had asked about ability to view sales by channel. There's no reports that allow that currently. You can view by location or warehouse. but you cannot view by a specific sales channel. You can use the wholesale planning functionality to separate out sales, like a wholesale sales channel. So we just treat those sales orders separately. It's not unlikely that we'll have an ability to do some channel level reporting in the future. It's not currently available, and we don't have an ETA on it. But
we have seen that as a development request, so I know that it's hanging out on our request. So we have seen that come up. As we hear from other users, we bump up the priority. So we can definitely add your interest to that too, so that we're taking that into account.
Yep. And then the other question with Sarah here. So they're looking to group products and change the categories to help with forecasting. We discussed collections. So they were curious if we pull, if that pulls back with BrightPro yet, or if not, if they can set it IP. So categories, collections, none of that can be configured within Inventory Planner. We're always going to pull that from a connection. Depends on the connection if we're able to see something like collections, which is very specific. I know we get that from Shopify. I'm not sure if BrightPro brings that information.
Yeah, if you want to drop us a chat, we can check into that and look for your situation.
Yeah, Sarah, feel free to ping us. Sometimes there are like custom fields that you can add, and we can find a way to bring that in for depending on the system. So with BrightPro, that could be an option there. But yeah, if you're missing something with like categories, for example, that's a product type we're always going to get from a system. So that cannot be handled with an Inventory Planner. Pretty much Inventory Planner is always read only for the most part. Like we're not pushing information back to the other system. The only exceptions is if you're connected strictly through an e-commerce platform, then we're the purchase order management system. You're using our recommendations. You can create POs, and then you can receive POs, and we'll give you an opportunity at that point to increase the stock in your store. That's the only time we push some info back. If you're connected through an inventory management system, you'll see the purchase orders push feature here, or transfer orders push. That tells you if you create a PO or a transfer order based on our recommendations, we're going to give you an opportunity to save it over to your system and manage everything else there. But generally, we're not pushing attributes, categories, or cost prices or anything. A lot of that you can set within Inventory Planner, but we would never push it back to the system. There's several other questions coming up.
All right.
Mark done on the ones that we've hit here. Okay.
Let's see, ABC classes. So you're asking about low or high profit items. So actually with ABC classifications, that's based either on revenue or units sold. So profit is not a consideration for that. And I got to this by going to account, settings, and then I came here to forecast. It's at the very bottom. Here's where you can customize this. So you can see that right now it's based on revenue. There is the option to change that to units sold. And you can change the breakdown here as well as the reference period. If that doesn't work for you and you need some other way to group items, I would suggest using IP variants or IP tags, I'm sorry. So you can tag items. You can do this in the catalog under, I believe it's under listings. Yep. You can set IP tags, but this is just tagging that will live within Inventory Planner. Again, not pushing to your platform. It only lives in Inventory Planner, but it can be helpful for grouping items that are not naturally in a catalog or a collection or a category by a vendor. You want to make a list of those hot sellers. You can do that with IP tags. So that's a good fallback option for creating those groups if some other solution is not getting that done for you.
Yeah, and there's several ways to configure them. Like if you run a KPI report to see your hottest sellers in the last 2 weeks or something, you export it out to a CSV, you could easily import those products in with a specific IP tag and then be able to filter them however you'd like. So you can change those ABC classifications and filter on them, or you could add IP tags and use them as filters as well. Just something important to keep in mind with IP tags is that by default, they're being set at the product levels, the parent. It's the parent-child relationship between products and variants. By default, when you tag one specific SKU, it's going to affect all of the variants within that product within the parent, but we can change that behavior. So if you prefer to be able to tag it by individual SKU, ping us, send us a chat there at the bottom right, and we can change that. So you can tag it by product or tag it by variant instead.
Mhm.
And then Bjorn, the last question here that I'm seeing, if I'm selling on Amazon FBA channels like in the EU, do I have to enable all channels connections like the different countries? Because they're wondering because within Inventory Planner, there's a line stating the combined in the FBA EU.
Yeah, you definitely don't need to have all of those individual ones enabled. That's a great situation where, for example, maybe we don't want to see any of the detail for, in this case, it's North America, but similarly for your EU connection, we don't want to see in any of the detail. You can make a combined warehouse. I think we have it there by default to see all of that information together. And if that's the only one you want to use, totally fine. Just disable what you don't need in that case for your warehouse views.
You got it. Yeah. And even you don't have to enable warehouses that are being included in a combined warehouse. And you can dial in your rules. So for example, if you do some FBM and you fulfill that out of your Shopify warehouse, right? So you could create a combined warehouse that adds together your stock and sales from Shopify with only the sales from FBM. Ignore the stock there. So you can really dial that in to make sure you have the right kind of forecasting location that you're developing through the combined warehouse. Of course, whenever you go to create a new order, like a new stock order, PO, transfer, at that point, you'll have the option to select where it's truly going because the combined warehouse is a virtual concept. But yeah, hopefully that clarifies that.
Awesome. All right. Thanks to those who stuck around for additional questions at the end here. If anything else comes up, please let us know. Pop down in the chat in the lower right-hand corner. We'll be glad to help you out. And we hope to see you again on another webinar with Inventory Planner. Thanks, everybody.
Take care. Thanks.